Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Matson Inc., ticker symbol MATX. So we're looking at Matson today both as a subscriber request and because the business continues on with the theme of looking at other shipping companies. So right now, Matson is trading for $63.97 per share. Over the last year, their stock price is down 32.5%. Over 5 years, however, Matson is compounding at a rate of 15% annually. Over 10 years, they're compounding at a rate of about 9% annually. However, going back prior to the global financial crisis, the business's stock price is only compounding at a rate of about 2% annually over the past 18 years. The company does pay out dividends, and right now they have about a 1.9% dividend yield. So their average dividend yield throughout the last 2 decades would be in addition to this 2% compounded annual return. Matson is down significantly from their 52-week high. They've been nearly cut in half from that level. They're just about $5 above their 52-week low of $58 per share. About 3.5% of their shares outstanding are currently sold short, and Matson has about a $2.4 billion market cap. So for additional background about the business, Matson Inc. is engaged in providing ocean transportation and logistics services. The business segments of the company are ocean transportation that provides ocean freight transportation services to the domestic, non-contiguous economies of Hawaii, Alaska, California, Okinawa, and different islands in the South Pacific, and logistics that offers long-haul and regional highway trucking services, warehousing and distribution services, supply chain management, and freight forwarding services. The firm generates the majority of its revenues from ocean transportation. The company serves the U.S. military, freight forwarders, retailers, consumer goods, automobile manufacturers, and other customers. The company was formerly known as Alexander and Baldwin Holdings, Inc. and changed its name to Matson, Inc. in June of 2012. Matson, Inc. was founded in 1882 and is headquartered in Honolulu, Hawaii. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Matson, based off of their business fundamentals. So this analysis is still an evolving process and it's a work in progress, and so it serves as an opportunity to learn in public. So it's going to continue to improve and get better over time, and with that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. And there are 2 key reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital, so by looking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. So Matson, as an ocean transportation company, is going to be operating in a cyclical industry. Their returns on capital are likely to be cyclical alongside fluctuation in freight rates. So it's not surprising to see that their returns on capital have also gone up alongside rising freight rates since the COVID-19 pandemic lockdowns. In 2021, the company earned 36% returns on capital, and over their last 12 months, they've earned about 47% returns on capital. However, still averaged out over their past 5 fiscal years, the company's coming in at about 13% average returns on capital. That's tantalizingly close to that 14% benchmark we're ideally looking for, but it's just below that. So this is going to be an X here on metric number 1. Their returns on capital, while cyclical and while they bounced around this 14% benchmark, have been solidly above those of a typical business throughout the past 5 years, and especially post the COVID-19 pandemic. Next up, for metric number 2, here we're taking a high-level overview of the growth of their business. So we're looking for revenue, net income, and free cash flow growth over the last 5 years. This metric is going to also be including their last 12 months worth of numbers, and it's going to be all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. So throughout this period, their revenues have almost doubled. Most of this major revenue growth, again, has come post-2020. Their earnings are also up more than 6 times, again on the back of these increasing shipping rates. And then their free cash flows have swung from being negative in 2017, 2018, and 2019 to they are very positive today. The company has actually produced $1.3 billion worth of free cash flow over their last 12 months alone. So that's over half of their current market cap. So this is massive growth across the board here for Matson. This is a big check on metric number 2, and this is our first check of the day for the business. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in the company by looking at Matson on a per share basis. So we're looking for earnings per share growth over the past 5 years for the company. In our previous metric, we learned that their earnings are up massively over this period, and at the same time, the company has begun to buy back their shares. So over their last 12 months, the company has repurchased around 6% of their shares outstanding. So this is important because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a company buys back shares by decreasing the number of them that they have outstanding, they're increasing your ownership percentage in the business, which ultimately increases the percentage of the business's profits that you're entitled to as a shareholder. They're doing this without you having to spend a dime, so it's almost as if the company is making a partial acquisition of itself. And so just like with any other acquisition, we want the company to be getting more value than the price that they're paying. So one of the downsides of their recent share buybacks is that their stock price has declined quite significantly over the past year. So you'd want to dig in and determine at exactly what prices they were buying back these shares, because depending on some of the timing of these share buybacks may look potentially expensive for the business. Again, this would just likely require some more research to determine if this was a prudent capital allocation decision. Either way though, with very strong earnings growth over a smaller amount of shares outstanding, this has led to extremely strong earnings per share growth for Matson. This is a check here on metric number 3, and over their last 12 months, the company has actually earned $34.16 for each share that they've had outstanding. Metric number 4, we're looking for something very similar. So here we're looking for free cash flow per share growth over the past 5 years. Matson had negative free cash flows from 2017 until 2019. Since 2020, the company has had quite positive cash flows. Over their last 12 months, the company has produced $32.35 per share. This is a big check here on metric number 4, as this is very massive free cash flow per share growth over this time. As again, the company has swung their free cash flows from being negative to being positive, and they've had these 6% share buybacks. So far through our first 4 metrics, we have 3 checks and only 1 X for Matson. Next up, for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses, because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that the business has produced over the last 5 years. So Matson ended 2021 with about $780 million worth of net debt. Since then, they've been paying this off pretty dramatically. Right now, they have about $280 million worth of net debt. And over these last 5 years on net, even when we include these negative years of their free cash flows, the company has still produced about $660 million worth of free cash flow. That's about double the amount of net debt that they have currently, and so on a basis of their abilities to produce free cash flows averaged out, it looks like they'd be very easily and very comfortably able to support their current net debt position. So this is a check here on metric number 5. Importantly, as we've noted before, the company has produced $1.3 billion worth of free cash flow over their last 12 months. So if they're able to maintain that going forward, it looks like the business would be able to pay off all of their net debt with the free cash flows that come from a single quarter for the business. So if their current free cash flows are anything like an approximation of what's more likely to happen going forward for the company, then it looks like they're very healthily able to support this debt load. So again, another check here on metric number 5, and this is our 4th check of the day. We still only have 1 X for Matson. For our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the yield of the 10-year treasury and potentially offer us a reasonable starting point for a valuation of Matson. So we're using their total enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of Matson that's more similar to if the company were a private business. So right now, Matson has about a $2.6 billion total enterprise value, and we learned that over the last 5 years, the company has produced about $680 million of free cash flow on net, meaning that averaged out, although their individual years of free cash flow have been very off from this, the company is producing about $130 million of free cash flow each year. So when we divide their $130 million of their average free cash flow by their $2.6 billion total enterprise value, that gives us almost exactly a 5% average free cash flow to enterprise value yield for the business, meaning that this is just hitting that mark of that risk premium that we're seeking in comparison to the yield of the 10-year treasury. And on a historical basis of their free cash flows here, this is going to be a check for Matson. Again, worth noting, over their last 12 months, the company has produced $1.3 billion of free cash flow. So to get a current free cash flow to enterprise value yield for the business, when we divide their $1.3 billion of their last 12 months of free cash flow by their $2.6 billion total enterprise value, That gives us almost a 50% current free cash flow to enterprise value yield for the company. That's potentially massive there if they're able to maintain and sustain these free cash flows going out into the future, as it looks like right now they're trading at about 2 times their current free cash flows. Just because both on an average and a current basis of their free cash flows, this is a check here on metric number 6, doesn't mean that you're going to rush out and go buy the business. However, this is not financial advice, and this is not a buy or sell recommendation of any security. Instead, this analysis is meant to be taken in holistically, and this metric is just one of our 6 metrics that we've looked at. So even though these metrics are simple, when they're combined together, they can be very powerful. And we've still got something interesting to cover for the business. So then as a bonus, here we're looking at Matson's dividend profile. So right now, Matson is paying out about a 1.9% dividend yield, which is slightly better than the dividend yield from an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends, so it's important to stop and look at the underlying fundamentals of a business and to determine whether their dividends are healthily supported by either their abilities to produce earnings or produce free cash flows. For Matson, we want their dividends to be supported by their cash flows. Thankfully, that has been the case for the company since 2020. They very healthily and very easily supported a pretty modest dividend payout ratio since 2020 onwards. However, it's a potential concern and a potential lapse in terms of their capital allocation that the company was paying out dividends while they had negative free cash flows from 2017 to 2019. Also, given their large amounts of free cash flow that they've had in recent years, some of their peers have elected to return quite a bit of this to their shareholders through dividends or special dividends. So because of these really atypical and very high free cash flows compared to where they had been at, management's approach to capital allocation and how competent and trustworthy management is really going to be a key consideration here for this business, as they do operate in a cyclical and commoditized industry that is prone to these boom and bust cycles over time. This has to do in part because of the lag time when it takes to get supply into this industry in order to meet demand. It can take between 1 to several years to contract and build new container vessels. And there are often periods of either a glut of capex in this industry or anemic conditions that have tended to oscillate over time. So again, with the industry seemingly going through a recent boom, management's approach to their capital allocation and what they've done with these excessive cash flows is going to be a key aspect to look at as you dig in and learn more about the company. Due to the cyclicality of the business and the industry that they're operating in, we're not going to be performing a discounted cash flow analysis of Matson today. In summary, though, the business does check the box on 5 out of 6 of our metrics. Matson was very close to being a perfect 6 for 6 on our Select 6 analysis. Their average returns on capital are coming in just shy of that 14% benchmark we're ideally looking for, coming in at 13%. And over their last 12 months, the company has earned 47% returns on capital. Because of the shipping boom since the COVID-19 pandemic lockdowns, the company's revenues, earnings, and free cash flows are up massively. They've also started to repurchase shares over their last 12 months. However, with a major decline in their stock price, you'd want to dig in and understand whether this has created or destroyed value for existing shareholders. It looks like with some of their recent high free cash flows, the company has prioritized paying down their debt, and that both on an average and a current basis of their free cash flows, that the business may be potentially offering an attractive risk premium in comparison to the yield of the 10-year treasury. Then it also looks like the company has healthily supported its dividends since 2020, and that their current free cash flows would be very easily able to support this dividend. Again, though, compared to some of their peers, they have not returned as much capital to shareholders as their other shipping peers have. And so understanding what management's approach to capital allocation is in this cyclical and commoditized industry is going to be very important going forward as a potential shareholder in the business. It's worth being mindful of the fact that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. This analysis instead serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about Matson. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $119. That's just 33 cents per day through my referral link down in the description below. Normally premium is $239, but if you use my link, it's 50% off. So check it out if you're interested. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business, and you can truly understand the ins and outs of that company and understand what's important and what's not important for the business going forward. So through this deeper research, you'll learn more about the qualitative and the quantitative aspects of Matson, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for the company will be. So with that said, that's it for today's fundamental stock analysis of Matson Inc., ticker symbol MATX. Again, we looked at the business both because it's a shipping business, which we've covered quite a few of them so far on the channel, and because this was a subscriber request. So I'm happy to make an analysis of the company. And if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Matson with me, and have a great day.